Is there a catalyst that you're looking at for Chinese equities?
Yeah, it's an arm wrestle at the moment. You've got the things coming out of the G7. You've got geopolitical issues and risks in terms of what's being said with the rhetoric with the US. You see Biden needs to put his own fingerprint on the Chinese relations, whilst you've got Trump in the background talking about we want $10 trillion in terms of compensation due to the virus, etc. But if you actually bring it down to the fundamentals, it's quite interesting. We're seeing opportunities both in the H and the A share market. And if you actually take in terms the volumes, so we've got accessibility via, you've got Stock Connect, and also you've seen quite a lot of QT quota in terms of applications going in as well. So I think taking that long-term view, we've seen a little bit of a pause in the market. It's gone sideways for a while, but earnings deliverability through that recent reporting season has been quite healthy. So I always get asked, what about timing in the market? And I don't think it's a bad time to invest currently.
Well, you talk about earnings, and to what extent will that earnings momentum continue if, as many economists would argue, we've started to see peak growth here now in China? In terms of that post-COVID recovery, if the economic picture starts to slow, does that drag on earnings?
Yeah, great question, Tom. I mean, I look at this as you see structural growth. So, yes, you've seen that V-shaped recovery, but you've still got economic growth and green shoots throughout China. Probably more at the central level, so the larger provinces, and then I think once you go to some of the local government areas and those more dispersed provinces, you're going to have, you know, a little bit of ups and downs. But generally speaking, the economic figures that are coming out of China are quite strong. You've also seen the RMB appreciation, which is a direct sort of correlation to that. And when it comes to the corporate earnings, the benchmark itself is not requiring much to come through to continue to see share price appreciation. I think you're only looking at sort of 10% EBITDA growth across the indices in MSCI Asia ex Japan. I actually think it's probably going to grow more, despite that base effect as we start cycling on that COVID sort of higher base.
And Sam, I know every time we talk to you, you seem always very quite bullish when it comes to the Chinese consumer. But leading up to the retail sales figure we're to get tomorrow, it seems like the Chinese consumer has taken longer to bounce back from this pandemic. We're talking about first in, first out, but it's only already been a year, and the Chinese consumption recovery hasn't quite gained traction. How are you viewing this sector now?
Yeah, great question, Yvonne. I mean, it's a really interesting space. If you take like Pinduoduo, Alibaba, JD.com, etc., what you're seeing right now is a lot of spending and cash burn. The customer acquisition cost, essentially through sales and marketing expenses, are going up quite considerably. And they're trying to obviously be a leader in community group buying as well. What I think we'll see is good revenue growth, but essentially some margin impact. I think it's a really important time to be a long-term investor because you can bring up their share prices, see how far they've fallen, and then look at what the valuations are, say, 2 or 3 years out from now. And I think there's some opportunities there. The Chinese consumer is incredibly resilient, particularly when you look at millennials. 400 million, so a third of the population, doing about 70% of the consumption purchasing. So I think what we've got here is some very strong structural growth. And when you've got that underpin, short-term issues that you've seen with regulation, et cetera, some of these tech giants produces opportunities.
And Sam, you mentioned about when it comes to the risks, regulatory risk is certainly one that many are focused on, whether it's in tech stocks or Chinese education. How are you viewing that?
Yeah, so the private education promotion law has come through, and you see the AST after-school tutoring stocks, which we don't own, but the ones such as TAL and EDU, ADR, has been absolutely hammered. When it comes to regulation in China, they do allow you to have breadcrumbs. And what I mean by that is you can get a sense of what they will do. I feel that they test the market with regulation, and some of this regulation should not come as a massive surprise. When it comes to investing in China, you always got to invest with confidence. And the way to do that is always invest with a regulatory tailwind. If you try to invest with a headwind, 9 times out of 10, you're going to lose. And you can see that with the support that they've got. Bring out things like CATL, BYD, et cetera, what's been happening in the electronic vehicle or battery space, something that we've been invested in a theme for a very, very long time. Even what you see in the solar prices, et cetera. So things like Xingyi Solar. So if you look at green energy, that's somewhere where there is very strong regulatory tailwinds, and that's a sector that we like, particularly because it's very strong on ESG. But be careful. I mean, that's, I think, what's stopping a lot of people investing into China is the regulatory uncertainty.
Yeah, there's still a lot of lack of details, isn't there, around this regulatory push. We're running short of time, Sam, but give us some of your top picks and explain the attraction of Korean Botox.
Yeah, so Korean Botox, I'm unfortunately at the age I haven't had it yet, but at some point I will need it. But it's like once you have it, you have to keep having your top up. So it's like recurring earnings from the business point of view. We like a business called Qjul, 50% domestic market share. They're expanding into China now via Stonehorn Pharmaceutical, which is their domestic distributor. And China's an incredibly big market. Meanwhile, they're going global, so looking for European approvals, and then they'll launch in the US as well. So when you've got a business which has very, very strong cash flow, improving margins because its export prices are much higher than the domestic, I think what you're going to get is an opportunity here with very strong compound annual growth rates. And for those who have seen its first quarter, you see already there's evidence of that. So Botox is one of those things. Once you have it, Tom, you got to keep having it.